All right. Good morning, good afternoon, good evening. Live and direct from my office, YouTube live Q&A. If you're watching this, even if you're watching it on replay, go ahead and leave your comments, questions, concerns in the YouTube chat box, description, comment section, whatever the hell it's called. I try to answer as many questions as possible. If you happen to be watching this live, it's only a dozen or 2 dozen nowadays that join this live. Fire away any and all questions you have for me. I think this is extremely useful for somebody who's in the market to buy. Maybe you're out shopping. Maybe you're just getting yourself pre-approved. Bounce stuff off of me. I'm happy to answer questions, direct, honest feedback for you. Whether or not you're working with me and my team matters none to me. Happy to answer those questions. If you want to connect me and the team, that's really easy. Maybe I'll leave this banner scrolling below. GreatMortgageBroker.com. That's how you fill out the form. We'll be in touch with you no matter where you're at. Buying in Arizona, Texas, Florida, Tennessee. We're doing stuff all over the country. Had someone reach out to me today. Hopefully I responded to you. Massachusetts and New York are the only 2 states we're not licensed in mortgage, but I'm happy to refer you to great brokers I know in those 2 states. So today, topic of discussion can be rates are higher, but people are still buying. I've got some, tales from the boots on the ground. Who's buying? How are they buying? What are they doing? Because interesting things come up when you actually are, a practitioner of mortgage and real estate. You see trends, you see stuff where you're like, I wonder if the data would support this small trend I'm seeing, or if it's just something that's happening in my business. One of the things I'm seeing is that a lot of the buyers who are buying today, if you think about the fact that money is more expensive and interest rates are higher, people are finding creative ways to not borrow money at a higher interest rate. What do you mean by that, Matt? Well, I've got a couple buyers that got into contract over the weekend, and 3 deals got into contract over the weekend. One of them, they're borrowing about 20% of the purchase price, putting 80% down. Another one is putting 25% down, but after some other homes sell and they do what they're going to do with their finances, they're going to pay off this loan in full within the first year, carry no mortgage balance. Another buyer is putting 5% down, so they're, actually going to be borrowing 95% and have the $7,400 mortgage to prove it. But I guess what's interesting to me is the fact that in a high interest rate environment, I'm seeing buyers that bought maybe 10 years ago, taking that $300,000 in equity, putting that as a down payment. Or maybe there's inheritance money that came from an inheritance that's being used as a down payment. Just because interest rates are higher doesn't mean that people stop living, stop having life circumstances that make them want to buy, need to buy, ultimately buy. So let me see what questions you guys got. I love to hear from you in the comments. I really, really enjoy the back and forth, so much so that starting next week, what I'm going to do on Tuesdays, in place of me standing here talking to myself, begging for you guys to ask questions, I'm going to have live interviews. Last week, I had Mark McDonough in the office. In a future week, I hope to have Ryan Lundquist. I hope to have a couple others that are local to me that I know can come in the office. We can record an hour and a half, good discussion around real estate, mortgage, the state of the industry. And as we're chatting, you guys fire away with questions, comments, and I'll do my best to provide answers. Answers that, if I don't say so myself, are pretty knowledgeable answers based on the sheer fact that I'm out there closing deals. We're pre-approving a dozen people a week. We're getting a couple of them into contract per week. As a company, we're closing 700, 800 deals a month. So I'm in close proximity to, and I'm personally doing a lot of deals. So I have some insight into how are people structuring their mortgage? How are people getting their offers accepted? How are people navigating this real estate market that really has no precedent, right? It's something that we haven't seen. So while I'm waiting for you guys to get up the courage to fire away and ask questions, hopefully these comments are turned on. Fire away in the comment section when you get a chance. I'm going to pull up what happened today. Why did rates get worse? Window. There we go. I'm going to pull up this screen. My friends over at MBS Highway, they wouldn't mind it. Quick shout out to Barry Habib. Shout out to MBS Highway. If you're a mortgage loan originator and you are not currently subscribed, you should be. And I get questions all the time about, what to do as a new originator, as somebody who's looking to get in a mortgage. Do all you can to educate yourself as much as possible. Knowledge drives confidence. Confidence drives success. So plug into things like MBS Highway, plug into great industry thought leaders like Barry Habib. It was a pretty interesting morning update that I'll read to you guys real quick here while we're on the topic of real estate. Home price gains continue. Case-Shiller Home Price Index, which is the one that everybody follows, showed 0.3% home price appreciation. While I'm waiting for this to load, I'm relatively certain that was for the month of March, right? And a lot of this data takes a little bit of time to get in and calculate, so it lags a little bit, but 0.3% home price appreciation in an environment, in a market where people are like, home prices can't go any higher. With rates like this, who the heck's going to buy? The market, for anybody who follows any Crash Brothers, geez Louise, man, those guys are batting 0% for a long time. Hopefully we're not cutting out here. I've got an unstable connection. Maybe it's not really feeling me pulling this up with video loading. So come on, interwebs. There we go. 2 bars now. Fairly good. What I just wanted to show people was 0.3% home price increase in March. So another all-time high. Home prices continue to go up. People continue to buy real estate. The fact that there is, did I just do it again? I just do what I did. Mortgage rates are up. That slows demand. It doesn't slow demand so much so that home prices don't continue to appreciate. So, now up 6.5% year on year, which is unchanged from the previous report, but it's still showing like a strong real estate market. FHFA released their house price index, which measures home price appreciation on single family homes with conforming loan amounts. It doesn't include cash buyers or jumbo loans, and it showed an increase in 0.1% in March, up 6.7% year over year, which was down from their previous report of 7% up. Minnesota Fed President Neil Kashkari, many more months of positive inflation data, I think, to give me confidence that it's appropriate to dial back. So maybe Kashkari's comments were what, caused this 34 basis point, or at least some of it, worsening in mortgage bonds, 9 basis points up on the 10-year treasury. Anybody who, follows mortgage knows that as the 10-year treasury goes up, mortgage interest rates follow suit, and worsen or go up. So 34 basis points on the day. This week, we've got mortgage apps, the Fed's Beige Book on Wednesday, Q1 GDP, initial jobless claims, pending home sales. That stuff's coming out Thursday. And then Friday, PCE, personal consumption expenditures. All this data coming out is going to factor into what mortgage interest rates do in the future. So watch for that stuff. Next Monday, I'll be live with my buddy Sean Grapevine to talk about what is going on in the world of mortgage interest rates. But enough of all that technical stuff. I want to speak to buyers who are out there in the market, who are frustrated, who feel like, the housing market left them in the dust. There is still chance. There is still opportunity. I've had many buyers who, part of the title that, mortgage rates are high, but people keep buying, is me thinking to myself introspectively that people have gotten over the sticker shock of higher interest rates. They realize fighting it or being upset about it, kicking, screaming, throwing a tantrum isn't going to do them any good. It kind of just is what it is. And the days of a $1,500 mortgage or a $1,500 or a $2,000 mortgage, at least in some parts of the country, it's just gone. And I guess for context, there's going to be some parts of the country where they used to have mortgage payments sub $1,000. Now they're $2,000 or $2,200, and that feels like the moon. I mean, other markets like California, where we used to talk about $2,000, $2,500, $3,000 a month mortgage payments. For most areas, for most buyers, that's a thing of the past. Now we're talking about, can I get my mortgage payment under $3,500? Can I keep it around the $4,000 range? For others that are buying in more expensive parts, they're shooting for $5,000 or shooting for $6,000. Whatever the case is, as a buyer, you've got to be realistic, and you've got to just look at the data for what it is. And you've got to make a real true assessment of, am I in a position where I'm ready to buy, I'm willing to buy, and it fits into my budget and my goals. It's not going to be the right time for everybody, but as the data continues to show, it's the right time for enough people. People still believe in real estate. There is no denying that real estate is a popular investment vehicle. Real estate is a popular asset to own. Just look what we did. We went and had mortgage interest rates go up. We had home prices go up to where the average monthly payment increased a ton, and people are still buying real estate. You know why? Because real estate's still a great asset that appreciates over time. It gives you tax benefit, and you've also got the luxury of it being kind of a forced savings, where every month part of your payment is paying down the principal and what you owe on that debt. So if there's not any questions, I'm going to get to it. I've got clients that I really want to make sure we get initial disclosures out on all these deals. Reminder again, starting next Tuesday, live in my office, I'm going to bring as many fun and interesting guests as possible to have live conversations about not just Sacramento real estate, but real estate all over California, real estate in Texas and Florida and Tennessee. I've got a couple Florida agents who hopefully are going to take me up on the offer to join and have a live discussion around Florida real estate. See what's going on there. Florida and Texas seem to be markets that were really, really hot, exploded, and have pulled back a little bit. So this is last call. Fire away with any questions, comments, concerns, or I'm out. And we'll see you next Tuesday with a surprise guest. I wonder what would happen if I just hung out here online, just waited. Oh, shoot. I didn't mean to do that. Oh, what'd I do? Yep. I'm going to make that call. I'm going to call back to my buddy Doug. I'll catch you guys next week. Talk to you soon. Bye-bye.